Hello everybody, I am Dhananjay Nene and I shall be talking about the mechanics of GST. By this I refer to things like registration to enable yourself to be a part of the GST ecosystem, an overview of the GST ecosystem itself, details about capturing the data that you need and that's necessary towards filing the returns, the sequence and the process of filing the returns. A little bit about the audience. This content is likely advanced for retail consumers. However, those curious might still find it useful. It's definitely not meant for the large companies or businesses who have their own taxation teams and consultants and things like that. But it is more appropriately tailored towards small business owners or people who operate small organizations who want an overview of what is really needed from them to operate in the overall GST ecosystem. A brief note about me: I am a programmer. I have worked on writing one of the software systems for GST called the GST Suvidha Provider for a company called Vayana Network, which is one of the 34 companies selected for offering GSP services. This process has allowed me to build a certain amount of awareness about the GST ecosystem, and hence I shall be talking about some of the useful things I have learned along the way. Having said that, this is neither a formal nor a legal advice and simply reflects the best of my understanding, so caveat emptor. There is a likelihood that this might be incomplete, misleading, and although unlikely, just plain wrong. So do consult your CA for authentic information about GST and its mechanics. So what are we going to be talking about today? A little bit about GST, very briefly, a little bit about GST registration, how the GST ecosystem is structured, some of the mechanics related to GST and the important dates, the invoice formats which help you understand what information you do need to capture. I'll show you some of the sample screens and then we will round up the presentation. So what is GST? It is Goods and Services Tax, which is a new indirect tax now applicable throughout India. It replaces the existing indirect taxation scheme, which included central excise, sales tax and a very large number of other taxes. India has a dual GST system, which means we pay separate taxes to the central and the state governments. For intra-state sales, the applicable taxes are central GST and state GST, and for interstate sales, the applicable taxes are IGST. Either way, the total taxes remain the same. In addition to these taxes, some cesses may apply for specific products which are typically either sin products or luxury products. There are various tax slabs. Unlike most GST systems in the world, India has a system with a very large number of tax slabs. So this includes things that are non-GST, they are exempt: GST 0%, 5%, 12%, 18%, 28%, and then on top of that you may have applicable cesses. So for any company to really operate in the GST scheme of things, businesses do need to register to be able to do that. Businesses with sales under 20 lakh rupees or rupees 10 lakh per annum in the northeast are exempt from the need to register and pay GSTs. The registration can be done online at http://www.gst.gov.in. You will need to submit documents about your business and use a digital signing certificate to sign your application. So all the process isn't very long. Your CA is best placed to help you carry out the registration, although if you choose to, you could do it yourselves. At the end of the process, you will be issued a GSTIN, or what's called the GST identification number. That's a number just like PAN number is used today for income taxes. GSTINs are used in the GST system for identifying a specific business. Technically, a business can have a fairly large number of GSTINs because every business gets issued a separate GSTIN for each state it chooses to have business operations in. Note that when I say business operations in, it's not the same as having sales in that state. In addition, businesses may choose to get more GSTINs, example for reflecting the different business verticals. Now a little bit about the GST ecosystem. GST ecosystem has the following players. There is a core GST network. That's a centralized system operated by a body formed by various financial institutions and the government of India. There is a series of GST Suvidha providers, which are referred to as GSPs, and a range of application service providers who are referred to as ASPs. A little bit about GSTN. That's the core or central GST processing system. It will have a portal through which small businesses will be able to access basic GST functionality, including being able to do file uploads and have some online web-based screens. GSTN has also promised that they will be releasing an offline tool fairly soon for doing Excel uploads of invoices. It is a general expectation that these capabilities will mostly be used by really small companies, though it is not clear yet if at what size using this will be less feasible or less practical, but one does expect that as the number of invoices increases substantially, this may not be the best way to perform the necessary activities under GST. So GSTN also provides a very different mechanism, which is an API based access, but this access is restricted only to the GSPs and these APIs are not accessible over the public internet. That is why all the GSPs have to have a dedicated connectivity between themselves to the GSTN. This particular mechanism of API access is also expected to be the dominant mechanism of interacting with GSTN, though in most cases it will be indirect via the ASPs and the GSPs. So GSPs are a set of intermediate companies who are required to offer a complete GST and API access to all other ASPs. To that end, even though there are a large number of GSPs who have been appointed, 34 to be precise as of date, this service shall be identical across all GSPs. This shields the GSTN server from direct internet-based API access. It allows a certain amount of redundancy and failover capabilities for the ASPs to be able to access GSTN. Please note that some GSPs are also ASPs, so they will all bundle the services together. A lot of press articles keep on referring to these companies as GSPs, though in many cases when they are referring to these companies, they are actually referring to the ASP role as opposed to the GSP role. Many ASPs will also offer one or more GSPs on their platform and allow their customers the ability to use either or more of them. Now let's talk a little bit about the ASPs. While GSTN offers an API and GSPs essentially allow the same API to be used by other ASPs, every ASP is expected to differentiate itself from other ASPs, and thus their offerings are likely to vary quite a bit between each other. One expects that there could be 100 plus ASP companies, and there is no basic registration requirement for ASPs. Any company can choose to be one. However, for ASPs to be able to access GSTN, they do need to establish a relationship with one or more GSPs and through them use the GSTN APIs. This way, a large number of different offerings can be tuned to different size of businesses, different industry segments, and can drive a degree of innovation and customization in the private sector that would be very hard for a single government portal to actually pull off. Note that a corporate could also choose to be its own ASP. It could write the necessary software to interact with GST and APIs, tie up with the GSP, and be able to do the necessary activities. So this is what how the various layering is there. So as you can see in this diagram, in most cases the taxpayers will interact with the ASP, who in turn interacts with GSP, who in turn interacts with the GST. And some offerings might be combined GSP and ASP offerings, so there could be a bit of a difference in how this all gets structured. We go to some of the important things you do need to know, important terms you need to know for GST. One of them is HSN and SAC. HSN codes have been long used in international trade. They are called Harmonized System Nomenclature, and these are used for classifying goods that are imported and exported and traded internationally. So now there is a formal list of HSN codes for use within India, which pretty much identifies every single piece of good or item that is traded. As a company, you do need to know the HSN code for all the goods you sell. However, HSN codes are 8-digit codes, and sometimes you are not required to know all those. For smaller companies, they might just need to know the first 2 digits, some other 4, and some other the complete code. Similar to HSN, there is a series of codes for services called service accounting codes, and if you are in the business of selling services, you would obviously need to know the SSCs for all the services that you do offer. Another important term is input tax credit, and for that I need to just explain the process of indirect taxation and the way it works in GST. So in GST, taxes on sales are levied by the seller, but they are collected from the buyer, and the seller in turn pays those taxes to GSTN or Government of India. In such a situation, the buyer has paid the taxes, and these are classified as input taxes for the buyer. Eventually, the buyer may add more value and resell the same products or modified products, and at that particular point in time, he may end up having to collect tax from his downstream buyer and then pay those taxes. At this particular point in time, the input taxes that he had already paid on his inputs can be deducted from the taxes he collects and pays on his sales, and this amount that is deducted is called input tax credit. This way, essentially, every company ends up paying the taxes on the value additions it makes, though it does it in 2 stages. First, it pays taxes on all the things that it purchases, and subsequently it pays taxes on all its sales, but deducts the tax it had already paid on its purchases. A quick note to indicate when and under what circumstances an input tax credit can be claimed. Business needs to have a tax invoice or a document that is evidence of a payment and a purchase. It should have received those goods or services. The seller has to have filed a return including the same information. The buyer can't have claimed depreciation on these goods, and there is a list of excluded items on which ITC cannot be claimed. So obviously the particular items should not be in that particular list, and fairly importantly, the seller must have made a payment of the tax on those items. So if the seller collects the tax from the business but does not make a payment to the government, the buyer will eventually have to make payment on the tax, and this is a slightly contentious issue, but nevertheless that's how things are structured at the moment. So let's talk about the composition scheme, or what's sometimes called the compounding scheme. For fairly small businesses within the 20 to 75 lakhs annual turnover range, the burden of actually doing GST filing and processing might be a little, and record keeping might be too high. So this is an alternative option available to them. Note that this is only available if a company is dealing strictly with intrastate supplies. If a company is doing interstate supplies, then this is not an option available to them. This requires far lesser record keeping. It has far lesser return filing because only one return needs to be filed every quarter and then one annually. The tax slabs are actually quite low, from 0.5% to 2%, but there is no ability to avail of input tax credits or being able to collect GST from buyers. So the seller effectively has to pay this tax directly out of the revenue that the seller gets. This is primarily for small businesses with local operations, and in my opinion primarily for those with B2C sales and those who really wish to reduce their record keeping burden. I don't think it necessarily saves taxes in all ways or in all situations. So whether it applies to your business is something that you do need to evaluate. But this is an option available if you don't want to take on the onerous burdens of record keeping and filing. Do note there are turnover limits. So a business over 75 lakhs annual turnover or dealing in interstate supplies will not be able to opt for the composition or the compounding scheme. A little bit about the returns. There are 3 returns to be filed every month. There has been discussion about whether it's 3 returns or 1 return, but if you look at the nomenclature, it itself actually makes it quite clear there are 3 returns, and the 3 are GST R1, which is GST return 1. That is the return indicating all the sales made in a month. The GST R2 is a return indicating all the purchases made in a month, and GST R3 is the monthly return which summarizes all the data across GST R1, 2 and various other information, and that summary when submitted is called GST R3. In addition to these 3 returns to be filed every month, there is one annual return that needs to be filed called GST R9, and thus there are totally 37 returns to be filed every year. Note that these have to be filed per GSTIN, not per business. So if a business has multiple GSTINs, then it will need to file 37 returns per annum for each GSTIN. In addition to these returns that I talked to, there are various other returns that exist for specialized contexts or purposes. Do check if that's applicable for your business, but I haven't really gone into details of what those are, and they are out of scope for this screencast. Just to detail out the mechanics a little bit further, because this is what every business owner will need to understand and grapple with, at least in the early days. From the 1st of a prior month to the 10th of the current month, a business may upload the sales invoices of the prior month to GSTN. However, the 10th of the current month is the deadline to file GSTR1, which lists all the sales of the prior month. Once all the sellers across the country have filed their GSTR1s on the 10th of a month, between 11th to 15th, each business can again download this information regarding all the purchases they have made as filed by their sellers, review it and make any changes. So a buyer at this stage may contest or may amend a sales invoice that has been filed by his seller. He may even choose to add or delete invoices at this stage, and by 15th a buyer needs to file the GSTR2, which is all the purchases that he made in the prior month. Do note that most of the information in GSTR2 will be auto-populated, except for some of the amendments that the buyer may wish to do and some of the input tax credit related information he may have to indicate. So GSTR2 gets filed by 15th. On 16th and 17th, the seller again downloads a GSTR1A. This is a listing of any of the invoices that he may have uploaded, but which a buyer may have amended or added or deleted. At this particular point in time, the only option available to the seller is they can choose to either approve or reject a buyer indicated modification. He cannot choose to add new invoices by himself at this stage. 17th is the deadline to file. Actually, file is not a right word, to upload or save the GSTR1A. It's not really a return, but it's an intimation where the seller says either he approves or rejects the changes the buyer did. Between 18th to 20th, each business can download a largely auto-populated GSTR3, analyze their tax liabilities, make the necessary tax payments, indicate the evidence of having made the tax payments in GSTR3, and by the 20th of the month they need to file GSTR3. So as you can see, there is a series of deadlines and activities that do need to be conducted between the 10th and 20th of each month to summarize and close the accounting activities of last month as far as GST is concerned. Once a seller files a return, he cannot change the invoices themselves subsequently, but if there were mistakes or if for some reason some of these invoices do need to be changed, what he can do is issue an invoice amendment in a subsequent month. This will be a new invoice with a new invoice number and issue date, but which refers back to the old invoice that the seller had filed in the prior month. In order to be able to file these returns, each business does need to capture certain information. This information is pretty much what your existing accounting systems are likely to be capturing anyways, except for a few small changes, and we will talk about what you do need to capture here. Do note there are a number of sections, and I am not going to cover all the sections. Like, I am going to skip over credit debit notes, advances and exemptions and things like that. I'm sorry. I shall be showing some screenshots here, and the screenshots are screenshots of a spreadsheet template that is a part of the GST and offline utility for uploading data for GSTR1, and it is available on the GST website. You can download the template. The URL is included here, but please note currently the offline2.zip file contains only the template. It doesn't contain the tool yet. So this is the first section in that particular file, and because it's kind of very wide, I split it in two parts. So for each B2B invoice, so each time a business sells to another business, each such invoice has to be listed here for that particular month. This includes being able to documenting the GSTIN of the recipient business. This is mandatory because without that it does not get treated as a B2B sale, and if the recipient GSTIN is not indicated here, the recipient will not be able to claim input tax credits on this particular amount. Then obviously there are invoice numbers. There are some rules about what special characters are allowed, that these have to be in sequence and so on and so forth. We won't go into detail on that. One of the important thing here is the place of supply. So you do need to indicate the place of supply for that particular goods or services, while in most cases it might be the place where the customer is located. There's a complex set of rules at times, and again, once again, consult with your CA to make sure you understand what are the rules around deciding what is the place of supply for either goods or services, and indicate that place of supply here. There is a fee for a reverse charge, and I'm not quite frankly sure why there is a reverse charge on sales invoices. Reverse charges are typically there, for example, on purchases, where you may purchase from an unregistered supplier, or you may be importing goods, in which case the buyer has to make the payment of the GST but indicate that it is a reverse charge. Not quite sure why it's here. I'm sure there's a good reason. The invoice types, again, it's regular or exports, or it's related to whether it's an export to SEZ and so on and so forth. Again, for most businesses, the invoice type will always be regular. If you're selling through a e-commerce website, then you do need to indicate the e-commerce GSTIN here. So this might be Amazon or Flipkart or Snapdeal or any one of the various e-commerce companies that you're selling through. You have to indicate the tax rate applicable on that particular invoice, the taxable value, and the total cess amount, if any, depending on what is the nature of goods being sold. So you can see you have to list all the invoices to all the companies that you have issued in that particular month, keep track of them, and be able to upload this data to GSTN. The next section we go to is the B2C section. This is the business to consumer section. Because you're selling to retail consumers, such a consumer may not have a GSTIN, and therefore there is no GSTIN included in these formats. However, within this there are again two sections. One is B2CL, which is B2C large. This is for transactions which are over 2.5 lakh rupees and are interstate sales. In this particular case, you need to capture each individual invoice. And there is B2CS or B2C small. In this particular case, you don't need to capture or upload every individual invoice. You need aggregate information grouped by the state or the place of supply and whether it's a e-commerce or non-e-commerce transaction. And you just need to report the aggregate numbers for B2C small sales. As I mentioned, there are many other sections. I have skipped over things like credit debit notes and things like that, or advances. Another important section is being able to indicate the exempt supplies. This is actually a section which is where you talk about aggregate numbers for a group by interstate versus intrastate, sales being made to registered persons or unregistered persons, or the category of the GST category, which means it could be a nil rated supply, or it could be exempted supply, or it could be a non-GST supply. So for a business which deals in any of these kinds of supplies, even though it doesn't need to indicate invoice level data for these supplies, it still does need to file a return where it files or submits the total amounts or the aggregate amount of such sales, even though these are not relevant directly for GST computation. Similarly, there is a separate HSN section, and as I mentioned, every business has a set of HSNs or SSEs that are used to classify its goods or services. In this section, you have to submit the aggregate amounts that you have billed on a per HSN or per SSE SAC code basis. So this information does not need to be tracked per invoice, but it just seems quite straightforward to imagine that if HSN and SAC codes are captured at an invoice level, then this section would be relatively easier to fill out, else it could be quite problematic and hard to fill this section out. One more note, you do need to keep track of your document numbering and submit the numbering sequences as used in each month. Thus, for your invoices, you do need to keep track of from and to serial numbers in that month, how many invoices got issued, how many of those numbers got cancelled, and the same thing applies for various other document types, including debit notes, delivery challans, and so on and so forth. So that's the nature of information that you do need to capture into your GSTR1. I shall now move on to give you a little bit of flavor of how you would interact with a GST system. Again, there will be a number of systems that you could interact with. most of them by various ASPs, their screens might look quite different. The screens I have shown here, or the partial screenshots, are actually part of a document that was published in December 2016 by GST and placed in the public domain. But lots of things have changed, so the document has been withdrawn, has been unpublished, and it is no longer authoritative. I would have used something else if they offered a good alternative, but given that there was no other document which shows a series of screens, I did include partial screenshots here, but be aware this is old data, this has changed, and the eventual screen that would present itself on the GST system is likely to be quite different than what you see here. Similarly, your ASP with whom you interact with may offer either similar or very different screens than this. This is just to give you some flavor. This is an example of where you might be shown your dashboard, and on that the ledger balances. Every business has a set of ledgers, 3 ledgers that are maintained with GSTN. So this represents the various balances there, including the liability, the cash position, and the input tax credits. This is a set of a sample screen showing mismatch reports where the seller version and the buyer version don't exactly line up, and they end up creating what is known as a mismatch. There is a specific set of rules on what constitutes a mismatch. Not every single disagreement becomes a mismatch, but typically when the buyer claims more ITC than the seller has documented, it will definitely be classified as a mismatch for sure. Now these mismatches do need to be resolved, and there is a process by which either they can just be resolved by the buyer indicating his version in GSTR 2 and the seller approving it in the GSTR 1A. But if the seller chooses to not approve it, there is a different process for reconciling this, but we will not be talking about it. Similarly, a buyer may actually choose to add an invoice here, which the seller may have accidentally overlooked, and that's important for buyers to do because they don't want to accidentally lose out on any input tax credits if the seller had chosen to, or rather overlooked uploading a particular invoice. This is a GSTR1 return summary indicating various sections in the GSTR1 form. Note that this is just the summary, there's a lot of details behind it. And once all the GSTR1s and 2s are filed, then at the end of it you get an idea of what your total tax liabilities are. That showed up in one of the first screens I showed, which was your ledger balances. And as a business, you would be required to make the payments for the various taxes. These screens may appear either on the ASPs or may even appear in specific payment systems. I'm not sure exactly where this particular screen could appear, this of making payments, but you do need to make payments and get a challan number at the end of it. So this is what a challan would get issued to you, and challan number would get issued, and that challan number is what you need to enter in the GSTR3 when you file the final monthly return, that is a GSTR3. And this is just an example of the summary of GSTR3. This is a rather large data structure, lots and lots of subscreens and fields and things like that. But this is the final monthly return. Thankfully, most of this particular return is auto-populated, and the business has to enter relatively little information, but it has to do so before it can eventually file this return. Do note that for each of the returns, whether it's GSTR1, GSTR2 or GSTR3, you will need to use a digital signing certificate. This could either be a certificate the way it's usually used for signing PDF documents or Word documents, or it could be, and that's stored on a USB token and issued by a certifying authority, or it could be an e-signing Aadhaar-based system. Both things are supported, but you do need to interact with your ASP to understand which are the systems your ASP is supporting, and use those to sign your returns at the point in time you file them. So hopefully I think that I've covered pretty much most of the things I wanted to. That gives you an overall feel, and this is just an overview, and it helps you probably understand more about what you need to be doing as business, and maybe it will give rise to more questions. Feel free to shoot them my way or talk to your CA. He's obviously the best person to be able to advise you, and I wish you all a nice day. Thank you.